Welcome to Friday Flows. It is a rainy, dreary morning here in the DFW. It's all right. I got my Whataburger in me. I got a taquito down. I'm ready to tackle the day. All right, so let's jump into ETF flows for over the last week. Now, typically I jump into the individual names and kind of give you an idea of what individual names have done well over the past week as far as flows coming into those funds. But I thought I'd zoom out and kind of give you an idea of what's happening in the overall markets. So over the last week, equity type funds took in an over $34 billion, fixed income, $15 billion. These are big weeks. So investors, whether they were jumping into equities or fixed income, these are big moves into these spaces. So investors are getting off the sidelines one way or the other. As you can see, year to date, equities and fixed income are pretty even. Typically, you would not see that, but obviously this year has been somewhat of an extreme year. As you can see from extremes, even though equities are up 135 billion on the year, last month was a huge outflow from equities over the last month. So, as things have changed, people change their minds. This week, people are like, oh, you know what, risk on, let's jump back in. But big numbers on the week. Where is that going within the flows? So with North American equity broad, so that's going to be your S&P 500s. That's going to be kind of all your US based equity type funds. So big numbers into equities this week, over $26 billion, over $6 billion just yesterday. And then year to date, again, broad equities have been where people have been putting the dollars. North American fixed income, the second one on the year as far as where people have been placing dollars this year. So we had a huge jump into equities. What were people actually buying? So this is where the individual funds come in place. S&P 500 is what they were buying. The SPY, IVV, VOO, all S&P 500 based funds that took in huge flows. SPY, the big one, took in 6.5, IVV 2.5, VOO 1.9, almost $2 billion. QQQ, which always is a good Behringer for how people feel about risk, took in 2 billion. That's a big number for them on a weekly basis. But otherwise, people were just getting in the market. So bonds, high yield bonds, total market, momentum factor, bond. These are all funds that people typically would have in their portfolio. So that tells me that they are a risk on, don't want to miss out. And whether that be in equities or bonds, they just don't want to miss out anymore. On the downside from flows, not huge numbers in the individual names, although tips, 1.2 billion coming out of tips, that's a fairly big number. ESGU, which is BlackRock's ESG aware growth equity fund, had 1.6 billion come out of that. That's somewhat interesting from the standpoint that just people pulling from ESG as energy has been one of the few bright spots. I think that's a trend that may continue over the next year or so as energy performs. So again, just wanted to give you some highlights for the week of things that have been happening. Again, investors very much risk on S&P 500. Let's do it. Let's get on it. Is that the right move? Will things continue to turn? Will things continue to be choppy? I think so. So we'll see how these investors fare over this next week to see if their ideas of where the flow should go actually matches the investment performance. So hope you have a great week, or a great weekend. I'm sorry, and I will see you on Monday.